High inflation seems to be again taking its toll on the NSC today. No indication that the situation's abating or that you'd be out of the woods soon. What needs to give, do you think?
It's a bit of a tricky affair actually, because naturally or empirically, when inflation is going up, the best investment that actually gives you a higher return than inflation should be the stock market. So in essence, we should be seeing people running to the stock market, because the money market is not giving you returns which are above inflation. But the Kenyan situation, if you look at it technically, the market was at an oversold, overpriced position towards the beginning of June, which it is correcting from. And if you look historically how it has corrected when it has come from that position, you have the mid-2008 situation when the market went down. So we expect it to chop sideways for quite some time actually. And in the next couple of months, we don't expect any medium-term bull run or long-term bull run, because the market is still way below its long-term moving averages.
Right. Let's talk about what we're seeing on the money markets. I mean, there are now calls for greater monetary policy tightening. The feeling is that the recent rate hike was just not significant. There are now fears of arbitrage in the market, something to do with the differential between the CBR rate that we've seen being increased and the pricing of government treasuries and traders cashing in somewhere in between. What are your views?
In terms of monetary policy, it's also a very tricky place for the authority. Do they strengthen the shilling and let inflation run away? Do they mop up the currency and stem inflation? Which side should they support most? Should they support the import side more than the export side? Because if they weigh in their weight with the import side, that means they put in policies to increase the demand for the shilling. In that way, the shilling regains its value, but also now reduces the inflows, the hard currency inflows into the country, which the central bank needs for its own reserves. There is a lot of arbitrary situations in the currency side, depending on which currency you are buying and selling. Giving you an example, if you start in rands, go to dollars, then come back to shillings, you end up making a small margin on top. Bonds, the bond market will remain a bit active as guys now go for yields as the market remains stagnant. So it depends on how you play your investment and how you do your asset allocation between the different asset classes.
I mean, although volumes are thin, we do see some stocks trading up. A top trader today was Co-op Bank, but a gainer was Kenyan Cobble. Why is that?
Kenyan Cobble, basically, if you look at the announcement that their profits are in double digits, they're about to meet where the target they met. If you actually look at it, when the government puts price controls on, like on fuel, that's when oil marketers actually make the most money. In a case where they had to charge clearly similarly the same price in maybe in Nakuru and Nairobi, now they don't have to do that. Once you move out of Nairobi, they can charge higher. So they actually do make more money when prices are being controlled. So there is a lot of value in getting into the petroleum companies, especially like Kenyan, which has sufficient volumes. Cooperative Bank on the other side, currently trading at around 1680, 1665. Is it a bargain? If you look at the historical highs, historical lows, and everything, it's at a prime place to come in. And so is the story with many other stocks in the stock exchange.
Yeah.
If you look at them individually and don't look at the market as a whole, you can get some good stocks to buy into.
All right, just for the benefit of our viewers, some of the other gainers today was Standard Group up 5% and Uchumi also doing well at 1.2%. But I'm curious to find out, we're going to see a few listings coming forward. Transcentury is something that everybody's watching with great excitement. The valuation of the company is that it's worth something like 12.5 billion shillings, and as a result, it's anticipated that the stock would trade in the region of 47 shillings. Do you agree with that?
At the moment, at the valuation moment, we haven't really seen the document of the valuation and how they've done their assumptions. But assuming that they list 3-4 months or towards the end of the year, I think that valuation might need to be adjusted to take care of the current economic situation the country is in, and the businesses that Transcentury are invested in. But I'm sure if they're going to come to a market, they will not come at 47 shillings. They'll have to come at a discount to try and get it fully subscribed.